How's everybody doing today? Welcome back to the channel. So today we are going to be talking about if there's going to be a recession in 2020. I'm talking about a major downturn into the market from 30 to 50%. So we're going to be talking about if this is going to happen, what's going on right now in the short term, and what we can expect for the rest of 2020. Now I'm trying to hit 1,000 subscribers by the end of this year. So if any of you guys watching right now can drop a sub onto this channel, that'll be greatly appreciated and it will bring me one step closer to my goal. So without further ado, let's just jump straight into this. So currently today, I'm recording this as of February 27. The market is down another 4.5%. So the S&P 500 at least is down 4.5%. This week it's down 12%, which is actually a lot. The Dow went under 1,000 points yesterday, and then today it's down another like 800 points, I believe, if not nearing the $1,000 mark. So the market is completely just taking a dump today. It's down over 1,200 almost after the market just closed, and that is just incredible. That hasn't happened in a long time, and we've seen it happen 2 times or 2 days in a row within the last week. I mean, not in a row, but I believe yesterday wasn't, but the day before we saw 1,000 dip, and then today once again we saw it again. So on February 21st it was at 29,000. It dropped all the way to 28. So we saw almost a full 1,000 point drop, and then the next day it dropped again all the way, and then today again we've seen a 1,200. I believe this is the biggest drop from this whole last week. So this is actually a pretty significant thing, all related through the coronavirus. Now I wanted to make a video on this because I saw a lot of news networks. Look, all of these are talking about the recession. Every single article I'm seeing is from a few hours ago today, talking about the recession. So I'm going to be talking about today, what are the chances that the coronavirus or this downturn of the market actually makes a recession out of it. And when I say recession, I'm not talking about like 20-30%, maybe 30 max. I'm talking about like 50% drop of the market. So let's just jump straight into this. So if you just look at the historical like 5 years, it's actually not even that bad. If you look at it, we're only yes, it's pretty bad. Like, this is a pretty sharp downturn of the market. But if you look at 27, the last time it was at 27 was literally just October of 2019, just the beginning of November. So that was the last time it's been at this low of a basically downturn. Today, if speaking today, so 25,000. The last time it's been that much was this dip neared it. So we are going towards mid 2019. So last time it was this much is mid 2019. So it hasn't even been a year. So just half a year ago we were at this point of the market. So it isn't that terrible. Don't look at this chart because I don't think it it didn't contribute for today. But if you go closer and you can tell that it did dip. So that is that, and I personally don't think this will cause a global recession in the long term for sure. I think this, as soon as this actually goes away within the next month or few months, I don't think that this should prolong over the rest of 2020. First of all, the only way, there's a few scenarios where we can see a recession, is if it actually starts impacting the US market. Obviously, right now there isn't that many cases in the US. There is a good amount, but a lot of people are recovering and it's not like that big of a deal in the US. Now when you go to Europe and China, stuff like that, and Asia, it's getting to be a pretty decent deal over there. Obviously, that's going to be affecting a lot of earnings. So I do think for the next 2 or 3 quarters, at least, we will be seeing a downturn. Apple recently came out and said that their stock is actually taking a pretty significant hit over the average of the stock market because they came out and said they're going to be missing earnings due to the coronavirus. And that doesn't only mean that Apple's going to do it, because if Apple misses earnings, I'm pretty sure every single phone company or technology type company like Apple, maybe Samsung, Microsoft, they will be missing earnings as well. And the chip companies that actually sell to the masses to Apple, they will also be losing money and actually missing their earnings. So as a result of that, I think in the next quarter for sure we will be seeing the second or third quarter of this year will definitely be taking a decent hit. So yeah, so they'll definitely be taking a decent hit. First quarter, I do think, but second and third, I think especially are going to be a lot worse. Now, if we just take a look at like one of these articles, they obviously, whenever I talk about articles on this channel, they don't really go too much in depth, but they do just talk about like rebalancing your portfolio. I personally would kind of disagree with that in terms of selling off, but if you want to buy back in, definitely I think that would be a good idea. This is I know a lot of people that during the 2000, I believe end of 2018 dip, so like right around here, it dipped from the $270 all the way down to the $220. So it dipped like almost 25%, and we're basically seeing that exactly play out. So far it's about, I think, down about 25%. If you look at the month chart, 3 month, I mean, it went from 7 to negative. Yeah, so it's about, I would say about a, not quite a 20%, but about a 15-14% dip so far. And if it keeps going, it's definitely going to be like the December dip. This wasn't really a recession. It was just like a contraction. I personally do not think this is going to be a recession. I think it's just a contraction of the market. Like I said, the only scenario that this will be a recession is if it starts affecting the US market in a much major way. I'm talking about people not wanting to go outside even. And we're pretty far from that in the US at least. And yeah, this definitely will affect earnings. It may go down another, like we might see this double up at worst case scenario, or bad to good case scenario. It's gonna just go down another double what it has so far. But like I said, I don't think this is going to be like a proper recession, like 50% down on the markets. I think this is definitely a short-term play. If you want to buy into more of your stock that you're thinking, I would definitely do that. Some stocks that, oh man, I'm watching closely. Obviously, Tesla. I already have some shares. I've been wanting to buy some more for a while. I don't think I will quite yet, but it's definitely will be interesting just because like it already went up so much that going down isn't that big of a deal. But if Tesla goes to the $500 mark, that's going to be very intriguing for me to buy back, or buy not back but buy some more. This is only one of my accounts. I just use Robinhood. I like using Robinhood when making videos just because the simplicity of Robinhood is very nice. This is only like a small percentage of what I have. These are like my not my short-term plays, but just the stocks that I like putting money in slowly and just building on that. I made a video on talking about this stock. I talked about CCL on my last video. I basically said how this this stock has been hammered just because it's a travel stock, and I've been slowly buying back in a few of my accounts, and I might buy some more on Robinhood, but I usually use Fidelity or Charles Schwab for my investment accounts. And I've slowly been buying on those accounts, Carnival, CCL, like every single day of this dip, I've been buying more and more. I think if it goes to the $30 mark, that's going to be a big thing, and I'm going to buy a ton. It's at an all-time low, and I mean, that company isn't going anywhere, so I think that would be a good buy. And then I've also been buying some Uber. Dude, Uber has been taking a tank, but Uber recently shot up, so, I mean, it's whatever. It's not that big of a downswing just because Uber shot up so much. Uber has already had this downswing in the last year, so it's still a pretty volatile stock. But if you guys are thinking about buying another stock, I would definitely look into Facebook right now. It's at a steal in my opinion. Anything under 200 for Facebook, or like 190, I would say anything under 190 is a pretty good buy for Facebook, because but that's only if you guys want to hold it for the next year or two. If you guys want to sell Facebook, I would not buy into it. But if you want to buy it and hold it for the next 2 years, at least, then Facebook I think is a great buy right now. I'm gonna definitely start buying some more. I think Facebook is about a quarter of my portfolio right now, and I'm definitely happy with it. It's definitely like, I think, a pretty good buy if you have a long-term outlook of it, just because of all the, I don't want to get too far into it, but just because of how much market share Facebook has in terms of advertising. If anyone starts a business, your business is going to be run on Facebook, Instagram ads, stuff like that. So that's why I'm really bullish on that. And yeah, other than that, that is about it. You guys got my obviously whatever I say, don't take it as investment advice. Make sure to do your own thoughts and research before buying into any of it. So yeah, thanks for watching. Once again, if you guys wanna subscribe to this channel, help me reach my goal of 1,000 subscribers, that would be really appreciated. If you guys want to sign up for Robinhood, that's what I've been using, or Webull, those are both great apps or investment brokerages. You guys will get 1 to 2 free stocks using that. All the links will be down in the description. So yeah, thanks for watching once again, and I'll see you on the next video.